Good afternoon, everyone. I, on behalf of Women and Young Members Empowerment Committee of ICI, welcome you all in the Sky High Symposium Series 44. Sky High Symposium is a Wednesday series of programs conducted by the committee for the women and young members. It is one of the Women and Young Members Empowerment Committee's initiatives to not only disseminate information to members on technical updation and non-technical skills, but also to empower and inspire them to come at forefront and realize their verbal skills at public forum. Today, we are going to cover session on TDS under section 194Q and 206C1H. This will be our first session. So I am Meera Dalal, and now I will be introducing CA Shikha Sheth, who is the speaker for our first session. Ms. Shikha Sheth has is a pass out of November 2017, and currently she is a partner at Mehta and Shah, a chartered accountancy firm engaged in providing services in the area of taxation, advisory, and accounting, both in direct and indirect taxes. She has received many awards. She has received the award of Group Leader for the year 22-23 at RRC held by Ghatkopar and Mulund Study Circle for leading the group under direct tax. She has received one more award as a group leader for leading the group presentation on medical tourism in India at GMCS. She is a regular member at Ghatkopar Study Circle, and she also trains administrative personnel of corporates on procedural aspects on complying direct tax law. I welcome Ms. Shikha Sheth today to throw some light on the topic of TDS on 194Q and 206C1H. Welcome, Shikha ma'am.
Thank you so much, Meera ma'am, for your kind words. So with this, we start our today's first session relating to TDS under section 194Q and TCS under section 206C1H. I'll be sharing the screen now. So today we are going to discuss about these spicy sections related to TDS and TCS of goods. When these sections came into force, more than the businessman, it was a havoc for a chartered accountant about its applicability, deductions, and so many ifs and buts. On plain reading of the sections, situations were such whenever the sections are read, we are acquainted with some query and more confusions. To clarify some of those, CBDT had released circular number 13 and 20 of 2021 for better understanding of these sections. So with this, we'll be covering four topics today. So first is why these sections have been introduced. Second, understanding of these sections, and third, issues faced while dealing with these sections and possible resolutions. So first, necessity for introduction of TDS or TCS. So the concept of TDS was introduced with an aim to collect tax from the very source of income. As per this concept, a person who is liable to make payment of a specified nature to any other person, that is the deductor shall deduct the TDS and remit the same into the account of central government. So the government wanted to tax all the transactions appearing on the profit and loss account, and the transactions of purchase of goods and sale of goods were not being attracted by TDS. Hence, these sections were introduced. So before starting, we'll be just seeing the definition of goods. So what goods is not defined in Income Tax Act or GST Act. We have to take the recourse of the Sales of Goods Act, where goods means every kind of movable property other than money, securities, but it includes actionable claims, growing crops, grass, and things attached to and forming part of land. So these are the inclusions: actionable claims, growing crops, grass, and movable property. But goods definition of goods excludes money, immovable property, and securities. I'll be just explaining these sections with a distinguishing format, which is easy to understand. So 194Q has been introduced from 1st July 2021, whereas 206C 1H was introduced with effect from 1st October 2020. That is FY 2020. So who is responsible to deduct TDS or collect tax? TDS in 194Q, buyer is responsible to deduct tax, and in 206C1H, seller is responsible to collect tax. And on which transactions it is applicable? So buyer whose turnover from business carried on by him exceeds 10 CR, on those buyers 194Q is applicable, and where the sellers whose turnover of goods exceeds 10 CR, TCS provisions will be applicable. So applicable on goods or services or both. So these sections are exclusively for goods. These sections do not deal in services at all. What are the rates of TDS or TCS? It is same 0.1%. What are the penal rates of TDS or TCS if PAN is not available? For TDS, it is 5%, and for TCS, it is 1%. So TDS return needs to be furnished in the form of Form 26Q, and TCS, it is Form 27EQ. And these are to be filed on quarterly basis. After filing the return, we need to give the TDS or TCS certificates to the assessees, to the clients, and that is in the form 16A, and for TCS it is form 27D. So time and manner of issuing TDS or TCS certificates, it is within 15 days from the due date of furnishing the statement of TDS. And what is the penalty for not furnishing TDS or TCS certificates? It is 100 rupees per day from which the failure from the day the certificate was due and till when the certificate was generated. Then the maximum penalty is TDS, maximum penalty is the TDS, what is deductible or collective. There are few points which are to be noted in these sections, which are first, when will the TDS is deductible under both the provisions, and that is when TDS is activated under section 194Q and TCS is activated under 206C1H, then TDS under section 194 will be deductible. So the buyer will have to deduct the TDS and not the seller. Okay. Second point to be noted is what if the liability of buyer is discharged by the seller? So TDS karna tha buyer ko, but seller has collected the TCS, then the buyer is not the assessee in default. Likewise, if the liability of seller is discharged by the buyer, then the seller is not the assessee in default. So when the purchases are more than 50 lakhs, TDS needs to be deducted under section 194Q. And when the purchases is less than 50 lakhs, there is no TDS because this is the basic exemption which they have provided. When it comes to sales, when the receipts is more than 50 lakhs, if the buyer is having a turnover more than 10 CR, buyer will deduct the TDS under 194Q, and the amount will be including GST. If the buyer is having the turnover less than 10 CR, then seller will collect the TCS under section 206C, and the amount is including GST. When the receipts is less than 50 lakhs, no need to collect TCS. So we'll be seeing these provisions via examples, from which it will be more clear to understand when and who has to deduct the TDS or collect the TCS. So there are 3 scenarios. So first, where the turnover of the seller is 12 CR, second scenario 6 CR and 12 CR. Then the turnover of the buyer, I'll be doing first scenario, then the second, and then the third, which is better to understand, I feel. So when the turnover of seller is 12 CR and the turnover of buyer is 6 CR, the sale of goods is 2 CR. The sales consideration received during the year is 1 CR. So since the turnover of seller is more than 10 CR, the seller is liable to collect tax at the rate of 1.1%, and the relevant section is 206C1H. On what amount TCS needs to be collected? So 1 CR was received by the seller minus the basic exemption 50 lakhs, so 50 lakhs. And what will be the amount of TCS? It will be 50 lakhs into 0.1%, that is 5,000 rupees. In second scenario, when the turnover is 6 CR of seller and 12 CR, that is more than 10 CR of buyer, then in this case, buyer will have to deduct the TDS under section 194Q at the rate of 0.1%. What will be the amount on which TDS will be deducted? That is 2 CR, that is this purchase of goods 2 CR minus 50 lakhs, that is the basic exemption, that is 1.5 CR, and the tax is 1.5 CR into 0.1%, that is 15,000. In scenario 3, both the seller and buyer has the turnover more than 10 CR, that is 12 CR both, and in this case, when both the sections are activated, buyer will have to deduct the TDS under section 194Q at the rate of 0.1%, and the amount of TDS will be like say 1.5 CR into 0.1%. Now, what here will be seeing what will be the treatment of tax on advance payment. So it has been clarified that the provisions shall apply on the payment or credit whichever is earlier. So section 194Q of the Act shall apply to advance payment made by the buyer to the seller. This is why it's circular number 13 of 2021. And I'll be explaining this by an example. So when the payment, the buyer has made the payment to seller of 1 CR on 21st April 2022 for purchase of goods at a later stage, the purchase value is 2 CR. So advance payment has been made. So total TDS has to be deducted on 2 CR. Okay. And TDS already will have deducted in April 22 because advance payment has been made. So TDS will be deducted on 1 CR. So on 1 CR, April, May, we need to deduct the TDS. Then on the balance amount on which TDS will have to be deducted is 1 CR. So on advance payment also, the TDS needs to be deducted. So continuing with the above example, with will your answer remain the same if the buyer is an e-commerce operator? So the answer will change if the e-commerce operator comes into picture, because section 194O is an overriding section as it starts with the words notwithstanding anything to the contrary, contained in any provisions of Part B of this chapter. So it starts with notwithstanding. So as per scenario 1, that is when the seller had to collect the TCS. So 194O will override and override 206C1H. And when, as per scenario 2 and 3, when TDS was applicable under 194Q. So when there is a competition between 194O and Q, so 194O will override. Okay. So we'll move to issues faced in implementing these provisions. Certain issues. First is, which is the base year for the threshold limit of 50 lakhs? So limit of 50 lakhs is to be considered in each financial year for each single seller. Okay. Second, whether the provisions of section 194Q of the Act shall apply to the buyer in the year of incorporation. So the section says that buyer is required to have a sales or gross receipts or turnover from business carried on by him exceeding 10 CR during the financial year immediately preceding the financial year. So this, if this current year is the, say 22-23 is the year of incorporation, 21-22 he does not have a turnover only. So 194Q cannot stand true in for 22-23. So TDS will not be applicable for the current year. So this I have explained with an example where the threshold limit and turnover, that the date of, this is for FY 22-23. So in scenario 1, where the date of incorporation is 1st May 2022, the turnover for FY 21-22, the immediately previous year is 0, and for current year 22-23 it is 11 CR, and the purchase is 60 lakhs. So TDS will not be applicable since immediately preceding year the turnover was 0. And in scenario 2, where the company has been incorporated before, that is 15 Jan 2018, and the turnover of 21-22 is more than 10 CR. For current year also it is more than CR. So on the purchases, that is 60 lakhs, for the TDS will be applicable, and the basic exemption limit of 50 lakhs also will be applicable, and the taxable amount will be 10 lakhs. And for the, this is the next year. Abhi next year mein, for in scenario 1, where the purchase is 80 lakhs. So now the TDS will be applicable because the immediately preceding year 22-23 the turnover is more than 10 CR, that is 11 CR, and the basic exemption again will be applied. So every year we need to apply the basic exemption limit of 50 lakhs, and the taxable amount will be 30 lakhs. Whereas in scenario 2 it will continue, and that the purchase is 80 lakhs, basic exemption will be getting 50 lakhs, and the taxable amount will be 30 lakhs. Whether all the income in profit and loss account is to be considered as turnover. The sales or gross receipts or turnover from the business carried on by the buyer must exceed 10 CR. Correct. The turnover from the non-business activity is not to be counted for this purpose. This is as per the circular number 13 of 2021. So this I have explained again via example, where there are 3 scenarios. Where the turnover, I'll be doing the scenario 1 first, where the turnover of seller is 12 CR, and there are various income of the buyer. First is income from business, that is sale of goods is 7 CR. Discount has been received on that, that is 70,000. The sale of scrap 30,000. Rent from house property is 3 lakh, and income from other sources it is 3 CR. So from these we have to see only the business related activities. The sale of goods is a business activity. Discount received is a part of it is received because of the business sale of scrap. Again, it is we are not actually doing the business of scrap, but due to the business, the scrap has been generated, and even this will be counted as a business activity. But the rent from house property and the income from other sources does not form part of your business activity, and hence these two turnover will not be counted for the turnover calculation, and the total turnover will be only 7 crore 70,000 and not 10 crore 4 lakh rupees. Whereas in scenario 2, the turnover is 6 crore and the income of buyer is as given, sale of goods is 12 lakhs, discount received 50,000, sale of scrap 10,000, rent from house property is 5 lakh, and income from other sources it's 1 crore, and the total income is 13 crore 5 lakh 60,000, but we'll be considering only the first three, then the total turnover will be 12 crore 5. Similarly, in scenario number 3, next issue is ki, what if the buyer or seller hold multiple GSTN? So whether the buyer needs to deduct the TDS as per the GSTN. So it says the threshold limit of 10 CR as well as 50 lakhs shall be computed annually on PAN basis and not GSTN basis. If the seller has multiple units where the purchases made from different units needs to be aggregated, likewise, if different units of the seller are under the same PAN, the amount paid or payable to such units shall be aggregated to compute the limit of 50 lakhs. Even this will be on PAN basis. So just to simplify myself, where the where the company MNP Limited has 3 branches, branch 1, branch 2, branch 3, located at Mumbai, Nashik, which is in Maharashtra, and Punjab. So the GSTN code for first 2 branches is same, and the Punjab it is different. The turnover of the seller in Mumbai is 12 CR, 6 CR, and 12 CR. So the total turnover has to be C. Likewise, the turnover of buyer is 6 CR for Mumbai, Nashik it's 12 CR, and Punjab it is 12 CR. So the total turnover is 30 CR. So we need not see branch wise, we need not see GSTN wise. We need to see as per the PAN wise. So total will be 30 for seller and 30 for buyer. What will be the treatment of TDS when debit note or credit note is issued? So when there is return of goods, I have purchased some goods and then I return those goods, then the TDS may be adjusted against the next purchase against the seller. And if it is replacement of goods, there is no need of any adjustment. What if when TCS is TCS is required to be collected at the time of receipt of consideration? No need of credit note arises because TCS is collected on the receipt basis. This is wide circular number 13. Okay. So I'll just explain this debit note from the point of view of TDS. So for the month of Jan 23, the turnover was of FY 21-22 was 12 CR. So last year it was more than 10 CR. So the buyer needs to deduct the TDS for the current year in 22-23. So the buyer has purchased from XYZ Limited for 60 lakh rupees. The basic exemption was 50 lakhs. So taxable amount will be 10 lakhs. So on 10 lakh, the TDS needs to be deducted at 0.1% of 1,000 rupees. Now, in Feb 2023, there are two scenarios which I'll be explaining. In the first scenario, now again the buyer has purchased 30 lakh rupees from XYZ, and then the debit note has been raised amounting to 20 lakh rupees. So the circular says then the debit note needs to be adjusted against the next purchase, that is the purchase of February, 30 lakh, and then the taxable amount will be 10 lakh rupees, and then 0.1 TDS needs to be paid. In scenario 2, no, nothing has been purchased after 60 lakh for that FY 22-23, then the debit note need not be adjusted anywhere, and the excess TDS which has been paid, that remains, and that's fine unless and until we pay less, there's an issue. If we pay more, there's no issue at all. Also, I would like to just mention that practically it is always better to not consider debit note, because it may come, the debit notes of previous year may come for the next year, or it may come after deducting TDS, which is after the next month maybe, or future months. So for calculating TDS, it becomes very time consuming, cumbersome, and then the error possibility of errors are more. So it's always better to ignore the debit notes. So just TDS paid would be excess. That's absolutely okay. As it is, the seller will be able to take the credit from the 26 AS when he files the return of income. Okay. So next we move to question number 7, which is whether TDS is liable to be deducted on purchases of capital goods or jewelry not connected with the business. So the section 194Q applies to purchase of all the goods. There is no condition that the purchases should be connected with the business only. Thus, if the purchase person is falling within the definition of buyer, tax is required to be deducted even if such purchases is not connected with the business carried on by him. Jewelry, being a movable property, is covered within the term of goods. Thus, the tax shall be deductible on purchase of capital goods or jewelry if other conditions are also fulfilled. So we'll just see an example over here where there are ABC, and in FY 21-22, normal goods has been purchased for 80 lakhs. Then from B, capital goods has been purchased 60 lakhs, and from C, jewelry has been purchased 70 lakhs. So whether TDS will be applicable? Yes, because assuming that 10 CR limit has been fulfilled, so and it is more than 50 lakhs, so basic exemption of 50 lakhs will be applicable, and the taxable amount will be after deducting the basic exemption limit. So nowhere in the section itself it is related if TDS needs to be deducted only for business goods or all goods. So it is from the FAQs and all, it is clear all the on all goods TDS needs to be deducted. Then this was for FY 21-22, and then for FY 22-23, where the normal goods has been purchased for 1 CR, capital goods 20 CR, and jewelry not purchased for that year. So TDS will be applicable for normal goods as it is more than 50 lakhs, and capital goods, since it is less than 50 lakhs, no need to deduct TDS, and jewelry, since we have not bought, there is no question of TDS. So whether section 194Q or section 206C1H applies when the seller or buyer is the person whose income is exempt. So section 194Q shall not apply on the purchase of goods where the seller as a person is exempt from tax under the act or under any other act passed by the parliament. So this section shall not apply on sale of goods to a person being a buyer who as a person is exempt from income tax under the act, like person exempt under section 10 or under any other act passed by the parliament. So this says when if the buyer needs to deduct TDS for the seller, but if the seller is a person whose income is such who is exempt from filing the return of income or under any other act as mentioned, then the buyer need not deduct the TDS of such seller, because since the return of income is not being filed, then he will not be able to take the credit of that TDS which has been deducted. So for the benefit of the assessees, they have introduced this, and this is also as per the circular number 13 of 2021. Whether TDS needs to be deducted on the purchase of immovable property by the developer. So now we just saw in the initial slides what goods means, definition of goods. So they had clearly mentioned that goods means every kind of movable property and not the immovable property. So immovable property cannot be treated as goods and they cannot fall under these sections. Also, purchase and sale of goods, purchase and sale of immovable property, there is a dedicated TDS section, that is 194 RA, where the TDS is to be deducted. So where a specific TDS section is already there, there's no point to be introduced over here. So immovable property, on immovable property, there will not be any TDS or TCS. Whether any additional, allied and out-of-pocket expenses will form part of purchase value of goods. So where these expenses have been reflected in the purchase invoice itself, it should form part of the purchase value. If they are charged to a separate invoice, it should not form a part of purchase value. So these situations will be really rare कि same invoice may they give the reimbursed out of pocket expenses. But if the situations are such, then we need to deduct the TDS on the reimbursement expenses also, and if we deduct more, it is better only. Since the government will get more, that's good. Whether the buyer shall be treated as assessee in default if the seller pays the tax due on the income declared in the return of income. So let's understand the question first. Whether the buyer shall be treated as assessee in default if the seller pays the tax due on income declared in the return of income. So in this case, when the buyer was supposed to deduct the TDS, he has not deducted TDS, and the seller, that income is of the seller. Seller has shown the entire, say for example, 1 CR there is a transaction of 1 CR. The buyer, Mr. A has purchased the goods of 1 CR from the seller. So seller and Mr. A, the buyer, has not deducted any TDS, and the seller has shown the entire income, that is 1 CR as his income, and paid the tax duly on that 1 CR, will then the buyer be treated as assessee in default or no? So, as per section 201 of the Act, it has been provided that when the deductor who fails to deduct the TDS, that is the buyer, is not deemed to be the assessee in default if when the seller has considered such amount while computing the income in the return and has paid the tax due on such declared income. Means, as we just saw that on 1 CR, if the seller has taken that 1 CR and paid the tax on that 1 CR, the buyer will not be deemed to be the assessee in default, but definitely he has to have some proof कि in future if any other department asks okay, why TDS has not been deducted, so he has to obtain a certificate from a chartered accountant in form 26 CA and has to submit it electronically saying कि the tax has already been paid by the seller, and then then the buyer is not required to deduct the TDS. Now, say A and B are both having turnover of more than 10 CR in the previous year. Now, there are two different transactions happening in the current year. One is if when A sells milk worth rupees 60 lakhs to B, and in another transaction, A purchases cattle feeds worth rupees 51 lakhs from B. So yeah, here Mr. A and Mr. B both are seller and both are buyer. So both are having turnover of more than 10 CR in the previous year, and the transactions are also more than 50 lakhs. So in this case, whether TDS and TCS both will be applicable, or only TDS will be applicable, and to whom TDS or TCS, if any, will be applicable. So, as we just saw in the previous slides, when TDS and TCS, when both the sections are activated, TDS stands true. So, buyer has to deduct the TDS. So, in the first transaction, when A is selling milk to B, so B is the buyer, so B has to deduct the TDS. And in another transaction, when the A purchases cattle feeds from B, the A is the buyer, so A has to deduct the TDS on 51 lakhs. Definitely 50 lakhs ka exemption will be given. So it will be 10 lakhs for B and 1 lakh for A. So for part A, whether TDS or TCS both will be applicable. So no, only TDS will be applicable. TCS will not be applicable. So part B already answered, only TDS will be applicable, and to whom? So in first scenario B and in second scenario A. Okay, so on the basis of limited facts present in the question, so these are the answers which we just discussed. So whether TDS should be deducted on purchase of software. So here there are many ambiguities, questions ki whether software is to be considered as goods or service, or depending upon the business of an assessee, the nature needs to be decided or what. So as per see, there are no guidelines or nothing specific has been mentioned, but some Finance Act has clarified. I'll just read it out. In the absence of any guidelines of IT Act, such classification was always subject matter of litigation. The Finance Act 2012 has made the clarification amendments in section 9 to broaden the scope of taxation of royalty. So this has been clarified by the amendment that the consideration for the use or right to use of the computer software is a royalty. Okay. The factors of the medium, ownership, use or right to use and location have been clarified as immaterial. The amendments have thus given a new dimension to tax administration in the sphere of royalty taxation. The payment towards the royalty is subject to TDS under section 194J or section 195. Okay, so this section, this clarification also it has been upheld by the Supreme Court judgment of in Engineering Analysis Center of Excellence Private Limited. So there is no need to deduct TDS on software, on purchase of software. Also, there is one more question which is running into my mind when I'll just go to that slide. I think I have skipped one. Okay, so I think we have completed well in before time. So this was it. If we are open to any questions, if anyone has any questions, we can deal with the same.
Thank you, Shika ma'am. It was very excellent and super seminar. You explained it very well. Now we will go to question answer sessions. There is a question from Sanjay Gopale ma'am, that if a customer failed to deduct tax irrespective of section 194Q applicable to him as a supplier, will he be held for responsibility of collection of tax under section 2061H?
So the question which has been raised by the member, it says when the buyer was liable to deduct TDS, but he has not deducted TDS, so will the seller be deemed to be an assessee in default or no? So the section clearly states when TDS and TCS, both sections are activated, when both come into force, the liability to deduct the TDS is on the deductor, that is the buyer. So if buyer does not deduct the TDS, seller cannot be the assessee in default. The department will come hold, the buyer only will be the assessee in default, and they'll catch hold of that buyer only.
Raghuendra Ageda is asking, does 94Q is applicable on purchase of electricity?
Okay, so whether on electricity TDS has to be deducted or no, so there are various so the FAQs where they have mentioned, because nowhere it is mentioned in the act or circular clearly, so they have told ki on electricity TDS TCS is not to be deducted or collected, because since it is a generation of electricity, so there is no need of deducting TDS, and they have kept it, as of now they have kept it out of TDS and TCS.
Ankit Kumar is asking, in case of non-declared by buyer about the turnover exceeds 10 crore, then how we
can you just repeat the question?
In case of non-declared by the buyer about his turnover exceed rupees 10 crore, then how can we know about buyer's turnover?
Okay, so what happens is, say we are in 22-23, okay, I am a buyer, I will know, and I want to buy from a seller. So sitting at my place, I'll not be knowing the turnover of the seller. So there should be some communication happening so that either of one has to deduct, since my turnover is more than 10 CR. So beforehand, say in March or April starting only, buyer has to roll out the mails or some communication, some declaration, whether to inform us whether the turnover of those sellers, vendors is more than 10 CR or not. When they'll just inform, seller will inform, my turnover is less than 10 CR. So if it is less, the buyer, that is, I need to deduct the TDS. If the seller will tell, no, my turnover is also more than 10 CR. So in that case, my turnover, means I'm the buyer. So my turnover is as good as it is more than 10 CR. So I have to deduct TDS. So I'll be in that position to know that I have to deduct the TDS. But what if the seller does not communicate at all? That then what do I do? Because then I'll be in a fix if I do not deduct TDS as my turnover is what. So we have to mention, and when we roll out the mails or communication, that if you do not communicate within so and so time or whatever, so then we'll be assuming your turnover is more than 10 CR or what. My turnover is more than 10 CR. I'll be deducting your TDS because I have to place it. So then TDS will be deducted.
Ma'am, Komal ma'am is asking, will you share the PPT with us? This PPT with us?
Yes, definitely. I'll be sharing that PPT after the discussion.
Ma'am, one ma'am is asking, what is the treatment in case of rate difference between debit note and credit note? If rate difference is there in debit note and credit note, what we should do?
So rate difference, are they mean to say GST rate difference?
I think so. That will be only the case because there is no other rate difference. I think so.
So if there is GST rate difference, we'll be deducting TDS before the GST. So if there is 1 CR, if the purchase of 1 CR and on that 18% has been levied and the purchase transaction is closed, later on when we come to know, the TDS, the GST rate is not 18%, it is to be only 12%. The transaction value of 1 CR is not going to change. The debit note will be adjusting to the GST amount. The difference of 6% will be adjusted in the debit note. Then there is no need to give any effect to TDS.
Yeah.
So पहले भी 1 CR पे ही था, अभी भी 1 CR पे ही है.
Yeah. Can you clarify on 50 lakh eligibility apart from 10 lakh top line? Darshan, can you please clarify on 50 lakh eligibility apart from 10 lakh top line?
Top line? I don't know about the top line.
I think so. She is asking that 10 crore is the turnover and 50 lakhs is the limit. I think so.
I'll just answer that. See, the turnover we need to see is of 10 CR of seller and buyer of the immediately preceding year.
Yeah.
And the 50 lakh is the threshold limit for the trend for the seller in that seller or buyer in that particular year. So as I just explained with my example, see, the 21-22, if I have purchased from a buyer, from a seller, say 80 lakhs, so 50 lakhs of basic exemption will be applied, and then there are no transactions. And in the next year, again, I have purchased 1 CR, again 50 lakhs of basic exemption will be given. So it is not 150 lakh only in the year one. Every year 50 lakhs we can take that exemption.
Yeah. Now next question is TDS rate is 2% on software under section 194J. Please guide on its applicability.
So today we are dealing in 194Q and 206C1H. So I would like to answer only on those. But yes, if you want to get the answers about 194J on royalty, you may contact. The number is already highlighted.
Current financial year turnover crossed 10 lakh, then I need to collect TDS, TCS about 10 lakhs, 10 crores only in current financial year.
Can you please repeat?
Yeah,
10
yeah.
lakhs is the
Current financial year turnover crossed 10 crores.
10 crores.
I need to collect TCS about 10 crores only in current financial year.
So, current financial year, the turnover is more than 10 CR. And then the transaction is of also 10 CR. Am I right?
Yeah.
Ha. So we have to see the turnover of previous year. What is the turnover of previous year? वो देखना है. If I am sitting in 22-23 right now, and the turnover of 10 CR is of the current year, that has not to be seen. 21-22 में मेरा turnover क्या है वो देखना है. If that is more than 10 CR, तो current year के जो भी receipts हुए हैं more than 50 lakhs, वो उसके ऊपर मुझे TCS collect करना है, TDS नहीं होना है.
Now
I
we will
think I'm clear on that question.
Now we will take one more question, last question. Assuming both have turnover more than 10 crore, in case of purchase of goods of rupees 60 lakhs as well as fixed assets of rupees 20 lakhs from same vendor, should TDS be deducted on 30 lakhs or only on 10 lakhs? Should we consider 50 lakh remit separately for goods and fixed asset? Is there any notification if it is should be considered as separate limits of 50 lakh?
Okay.
Yeah.
So when the threshold limit of 50 lakh is given, they have told if 50 lakhs they have to consider for a single seller. It does not say कि single seller के पास से आपने अलग capital goods अलग लिया है, goods purchase business related goods अलग लिया है, सिर्फ jewelry भी वो बेचता होगा तो वो भी अलग है. तो ऐसा नहीं, एक seller के पास से 50 लाख, फिर वो कुछ भी होने दो, anything it may be.
Thank you, Shika ma'am. It was very informative and very nice session. You explained it very well and many things got cleared. We did not read this session before, but it was very smoothly going on and you cleared every topic with examples, and it was very cleared by examples that how we should deal with the if some questions comes to us, yeah, something arise to us, we can clearly go against it. And it was very and you were an anchor role in this. You have started very nicely and completed it till the last. Every topic was very nicely covered. It was very comprehensive and nicely prepared. The PPT was also very up to date and very informative and very small and very short.
Since I have to maintain that 1 hour.
Right, in very short time you had very much covered all the topics. It gives us clear vision relating to everything. I want to thank you on behalf of women and young members empowerment committee so for taking this seminar, and I am proposing a hearty vote of thanks from all of us, from this committee members. And I also want to thank you, thanks to Preeti Savla ma'am, who are taking efforts to always see that on every Wednesday there are new seminars relating to different topics, and women are getting much benefit because they can sit at home and attend this all seminars. And also I want to thank CA Abhay Chajat sir, who are the vice chairman of Women in Young Member Committee. Thank you. Now I am going to give Mansi Shah ma'am to talk about our new speaker, Nehal ma'am. So thank you. Thank you, ma'am.
It's my privilege to introduce our next speaker for the evening, Ms. Nehal Shah. She's a fellow chartered accountant and certified internal auditor, and additionally, she has also done her CISA, DISA, and FAFD. She's a partner at CNK and Associate LLP. She has 24 years of rich experience in providing internal audit and assurance services to various business sectors. She is a techno-savvy person and uses her interest in technology while providing the services. Also, she has taken many IT initiatives as well in her firm. She is a chairperson of Bombay Women's Circle and vice president of Institute of Internal Auditors. She has spoken at many seminars organized by IIA and ICAI. Earlier, she was a member of Professional Development Committee of WIRC and has been a member of Human Resource Development Committee of BCAS. Today, she will be sharing her experience and knowledge with us. So without any further delay, I would now like to welcome Nehal ma'am to begin the session.
Thank you, Mansi, for kind introduction, and very good evening to everyone. I'll share my screen. Yeah, hope everyone is able to see. Yeah. So our today's topic is effective I report writing, which I would call like, all the efforts put together while conducting assignment and it's your final packaging, and how important is that. So let's visualize a typical blood test report. So when we look at a report, what are the facts will draw your attention? To start with, name, which nature of blood report, or what is the result? Are there any negatives? So these are the typical important aspects which we would look at, and how we would apply these principles as far as internal audit report is concerned. So title of the company name, what was the area you have covered, period, addressee, which is very, very important aspect, whether you are addressing it to audit committee or authority with correct designations, because these are very sensitive aspects when you send the report. And then it has to be marked to who all, what are the protocols, are there any CCs required, period of the report, of course, which is like, what period we have covered, opening introductory paragraph detailing what was the plan, what was the scope, methodology, objective, etc. And of course, every report which can be divided in detailed report, where every observation can be explained with the facts and in detailed manner, while executive summary is something where you would like to highlight only key issues, mainly for senior management and control weaknesses. So which is like, you can call it executive summary. Action taken report is basically every observation where if there is any action plan decided by auditee, what is the timeline, and when we go in the next round of audit, or to we see that whether those actions have been implemented or not, and to give status on that, so that particular section. And then we come to detailed observations, finding, recommendation for each observation with regard addressing the root cause. So based on that analysis, and of course report date with signature, membership reference, and UDIN, which is mandatory as per our institute regulation. Many of you might be mothers or parent of kids, and when we look at a typical student's report card, what message do we get out of it, or what questions arises, where the student is focusing or where the student is lacking behind, if which subject is weak, and where to work harder and how to go about it, whether any extra coaching is required or any better books are required. So we work towards a solution which are implementable considering the nature of that kid, what interest and how to maneuver the child to achieve the end result. So how would we apply this to our internal audit reports? So when we read, of course, we observed, we focused on area of concern, underlying cause, and we worked out the solution, which is practical and implementable. And last but not the least, we can only hope whether child will agree to action plan, and who should do what and by when. So which is like, what we were talking about, action plan and agreed timelines. So we can adopt similar concept as far as our internal audit reports are concerned. So when it comes to oral communication, of course, like, whether we are hearing auditee or our client carefully and analyzing what they have to say. And when it comes to written communication, let's go through few examples and of how one can write reports. So everybody has their own style and flair of writing, and that the same is applicable to internal audit reports. So when we look at a slide like this, where all details might be there, including the quantification, the concern, and the recommendation. But as you can see, there are long paras and long details. And in today's era of WhatsApp, where we all have got used to reading very crisp messages, and so is applicable to internal audit reports as well, where senior management wants to see the crux of the matter and where you are driving the point. So instead of this, how about we write in this fashion where you can put it in pointers and in the bullet format and in a crisp manner what you want to convey. Even some specific details, if you want to give, you can give in a table format, which is easy to read. It will fit well in your PPT presentation as well. So this is one way of looking at it. So we cannot imagine pizza without cheese, and so is we cannot imagine reports without relevant numbers and quantifications. So because that's the whole again the essence of any area where we would have done statistics or trend analysis if there are any aberrations or trend observed. So that this numbers are very important to give give perspective to the reader when we are talking about a particular issue or concern, how big it is, or if I have found certain instances, how many I have found out of total population or in terms of percentage. So it's very important to give that perspective to the reader. So if we see example over here, the first example where it's written few cases of adverse balances and expense showing credit balance or income showing debit balance, vis-a-vis table given on the right side, where numbers are also plotted in terms of number of accounts, what amount I'm talking about, and the nature of transaction. And in the second example, where delay payment charges observation is given, where only delay in days and delay charges are given. But if you see on the right side, where in heading itself, it's written that payment charges delay is ranging from 21% to 135%, and the total amount is given. And in the table where additional information of bill amount and percentage of bill amount is given, which gives perspective to the reader. Likewise, here there is an example where cost of diesel is being analyzed, where 2 years numbers are given and increase, and the conclusion, which is like very open and motherhood kind of statement, where it seems someone is misappropriating or dummy bills of diesel are paid. But when you look at the right side, where in addition to cost of diesel, building occupancy or numbers are given, diesel rate, which has increased, that fact has been presented. Then load shedding during summer, which is also kind of increased. So these are the aspect which is bound to impact your diesel utilization, and so there is an increase. And now based on these facts, if when we write the conclusion, it gives the correct perspective and correct conclusion. So friends, what are the essentials of any good report? Language command, of course, like whether grammatical or when we are writing, the articulation is very important. Content knowledge, one cannot live without. The subject, what you are writing on, the aspect what or process what you are covering, whether you have understood or applicable law, regulation. So when we are writing any implication or even observation concern, without knowledge, we won't be able to put it in the correct manner or correct perspective. Creativity, yes, like, there also how to make reports more interesting when a reader is reading first slide and would want to go to the second slide and to the end of the report, and how to keep that interest alive. Empathy towards the reader. So we should try to put ourselves in the shoe of auditee, and use the wordings accordingly. And here, like, internal auditors are not supposed to be a fault finder, and the whole exercise is not to be meant to be that way. So it's very important how we are conveying the message. And most importantly, the thought process, how we want to convey, what you want to convey, the flow of the report, or whether it is like in a particular fashion, say, right, you start from process level issues, which are process and control level issues, which would be applicable to whole population or to the entire process, to IT level, and then regulatory, and then maybe coming to the specific instances where you can map your process level issues, and where you can give the quantification and what may have gone wrong and how to tackle that. So recommendations with regard to that, and then you may point out low risk issues which could be more in nature of procedural or housekeeping related. So as an internal auditor, of course, the greatest challenge we have is how to navigate ourselves from plethora of records and come out with report which are sensible, and where we have a message and where we can add value to our client's organization. So how do we achieve these aspects? So as I mentioned, like, we have to be very careful about the words what we are using, not to alarm the reader unnecessarily unless we have the content and the quantification. Avoid making motherhood statements, particularly when I read reports of my team, and many times we discuss, and I see that it's very easy as an auditor to give recommendation that maybe, for example, go for system upgradation. But have we applied our mind and looked at what is the cost benefit analysis before giving that kind of recommendation, or we just say that internal control needs to be strengthened. But what is that specific you want them to do? And it always helps the reader and auditee if we can be little more specific, and your recommendation will be bought immediately if it would make sense to them, if these are practical in implementation. So we must keep an eye on that. Factual accuracy, of course, we cannot go wrong there. So if it is voluminous data, please ensure that you have double checked before you have given to the auditee. And also you can have a practice where draft report is shared or observation sheets are shared, and get that consensus from the auditee if there was some miscommunication, misinterpretation, or factually any data is incorrect. So then there is an opportunity to correct and give the final draft report with the correct numbers and details. Logical reasoning, of course, is like, my observation with my connection with recommendation or implication, whether that is in sync, by being objective and of course not letting our personal biases, we may have seen somewhere other or some other organization or some past experience with that particular auditee. We should not get biased by that. The only facts and only what we have in front of us, that should get reflected in our report. And last but not the least, which is very important, we must keep our report concise, though all necessary information must be there, all quantification must be there, but how to put in a concise manner, we all must have understood and learned Tracy writing in school. So that quality and that learning comes very handy when it comes to internal audit report writing. So just ask one question before when we write, whether any information what we are giving, is it necessary to include? And remember, the reader does not, we are not going to go with the report to auditee. You would be sending it through email or saving it in shared drive. So we are not going to be there to explain them. So a report should be self-explanatory and should be very clear. So maybe one practice you can introduce is, if you have drafted a particular observation, maybe give it to your colleague to read and see whether he or she is getting the same message what you are trying to convey, or are there any questions or any ambiguity which you need to address. Title of the slides are also very important. So if you can give gist about what you are going to talk on that particular slide, it's always helpful. At the same time, as mentioned earlier, don't keep it dramatic or alarming unnecessarily, which is like, reader cannot relate to when it comes to the detail. So title should be crisp, but at the same time should be apt and preempting what I'm going to talk about on that particular slide. I'm a huge fan of Bollywood and always believed that picture would tell thousands of words which we may not be able to convey paragraphs after paragraphs. So how to include pictures in your report? So these are like, some of the examples where you may have done a physical visit to the site or some sort of spot verification. And these are like, where it's so immediately it will get registered to the reader or senior management whether in this case, whether safety standards are followed or not followed, which is like, live example, you can see over here. So this is like, of course, please do take permission of client before taking pictures, because many of the organizations where mobiles with camera is not allowed, and so ensure you have the permission before taking any pictures like this. And now let's look at different types of report formats, like, where you can combine pictures with what you want to convey, what you want to talk about. So here, like, you can see where there is a water in bucket where sand should be there, and what would be the implication in terms of, like, what observation and what recommendation you would want to give. So these are some pictures that after report discussion where client has updated us as an internal auditor, where they have taken action. And of course, when you go next time in your next visit, you can check those aspects, whether they are following this consistently or not. You can use different kind of color coding to highlight, and it, like, put it in a table which is easily readable, and at a glance reader can figure out what points are you driving at or where the attention is required, while at the same time ensure there are not too many colors in the report, which becomes like flashy, but it should be easy to read and pleasant to eyes. Sometimes you come across some issues where you need specific attention of management, you want to highlight to them, which could be at the beginning of the report, depending on the severity of issue, or you can issue it as a flash report also, and give all the facts and figures with the outcome, or where, like, you want to drive the point, or where the immediate action is required. This is another example where, like, if any recommendation we give, if we can map to the benefit or advantage what organization can derive, and this will get registered immediately to the reader, and when they see benefit, they will buy your recommendations immediately. And that's where, when we see next time and we see that those actions have been implemented, that, and believe me, the kind of satisfaction you will get from those value addition is beyond the monetary fee amount what you may be getting for that particular assignment. So these are the few questions we must ask ourselves, like, while we are writing the report, why are we writing this report, or what is it I want to convey? So that's where the clarity of thought comes. And once that is in place, your flow of the document will be very fluent and very easy. Who will this report be of interest to? So that clarity of audience is very important. So whether it is management or audit committee, they would be more interested in macro level issues, or where, like, there is any high risk level issue. So that is, but if at the same time, if I am writing a report for the line management, they may be interested more in specific instances, and that if I can map to the implication and recommendation, that will get registered well with them, and that's where you will see the improvement when you go next time. And how should I make my report effective? So clarity of format, before starting any assignment, have that format ready in your mind and on paper. Have your format ready and the flow ready. So as and when the team members are concluding the particular part of section or particular part of report, you can parallelly start drafting your report rather waiting to complete the entire exercise, and then 4-5 team members would be like writing the report, because then the whole exercise will delay. Your conclusion, your discussion, your feedback, everything will get delayed. So try and achieve these aspects before you start the exercise. So as I mentioned, like, the entire efforts is basically packaged in a form of a report, and which we use as a term that report is presented. And so we must make it attractive as a gift, and ensure that we convey what we want to convey to our reader and client, and achieve the objective which is decided before we start the assignment, and we achieve our goal. So that's from my end, and happy to answer if there are any questions. I would also like to add here one more point where, like, is minor points, but these are very finer but important. Keep consistent as far as font size is concerned, font type is concerned, whether my amount formats are the same across the report, or it should not be somewhere in rupees, somewhere in dollars, or alignment also of the document, whether these are right aligned, numbers or statistics are center aligned. So ensure that these are also paid due attention, and have the final product in such a way that when the reader or client sees, they know that yes, this is from a particular firm. So in my case, like, say if it's from CNK, the reader will know the moment they see and take reports in their hand, they know that the same quality is maintained, not only from the content but also from the presentation point of view. So that's what I wanted to share with you all, whatever experiences we have as far as internal audit reports are concerned.
Thank you so much, Nehal ma'am, for your such an informative and very knowledgeable things you have shared with us about internal auditing, internal reporting. And you have actually informed us about many of the critical aspects, crucial aspects, which we generally tend to neglect in the what we can say, like work pressure, or like many things you have told us. That the one point which I actually hit me was the report should be presented. And that was something which actually hit me. Like in future engagements, I should take care that my report should be such impressive, and that everybody should be tending to read it again and again, though it is an internal audit report.
Absolutely.
But still, thank you so much, ma'am. And I don't think there was anything any doubts or anything. Everything was very clear. But still, we have one or two questions from our listeners.
Sure.
One of the questions is from Kavita ma'am. Do we need to follow any internal audit standards?
So that's a different topic by itself. So Institute has come out with internal audit standards, and yes, we have to follow those. And Institute of Internal Auditors also has their own international audit standard. So if you look at any of the standard, principally they all are same in the similar line. So I would recommend to go and read those standards, and which will also take care of the finer aspect, which is not directly connected with internal audit report, but still, like, it would help you in conducting as well as presenting the good reports.
We have one more question, ma'am, from Surbhi, ma'am. She says, can we have a draft internal audit report to view?
So, yeah, I mean, I can share the format. See, everybody has their own way of writing reports. So there is no standard format per se. But I will share draft format also, which can be a guidance, and you can modify, improvise. And in fact, I would be happy to see if any of you participants also wants to share any format, because this is like, constant learning and constant changing topic. So as a firm, like, we also go back to drawing board every 2 years and see if we need to change the report format, or we want to bring. So, like, now with, of course, aspect like data analytics, and we do trend analysis. So there is, like, the way we are conducting audit is also changed with the time. There are also tools available where, right from my audit plan program to report, which can be done through the software. And of course, any software, it is garbage in, garbage out. So how well we capture, maybe at an observation level and query sheet level or audit program level, and then the software will throw executive summaries or presentation in terms of my final report. So you can explore those options also.
Okay. Thank you so much, ma'am, for your wonderful piece of knowledge you have shared with all of us. But before we end this session, Preeti Savla, ma'am, the chairperson of Women and Young Members and Empowerment Committee, was to join us. I would just like to confirm whether she has joined us. And so I would like to invite her to address the session once. Ma'am, can anybody confirm me, please? Okay, I don't think ma'am has joined us as yet. So before we, since we come to the end of the session, I would like to thank everybody. I would like to thank the speakers, Nehal Shah ma'am, and obviously Shikha Sheth ma'am, who have shared so much knowledge with us. And I'm definitely sure that everybody have gained very much from this session. But I would also like to thank the committee, Women and Young Members Empowerment Committee, ma'am, I'm sorry. Okay. Women and Young Members Empowerment Committee also I would like to thank, specifically CA Preeti Savla ma'am. Though she is not here, but her continuous endeavors to keep up with sessions like these, and also Vice Chairman Sir Ajay Chhajars, who is also assisting in continuously in keeping up these sessions and bringing to us at home sessions like these and with these virtual times. So I thank the speakers, our management, and I also thank all the participants who have patiently listened to everything, brought up their questions, and also tried to understand, and they want the formats also, the PPTs also. I think the session was very involving. Thank you so much, everybody.
Thank you, everyone. And thank you, Preeti ma'am and WRC, for giving me this opportunity to share my thoughts and experiences.
I would request the technical team to cut off the session. Thank you so much.